My name is Erik Anderson. I'm one of the senior advisors here at Capital Infusion. Today we're actually talking about one of the borrowers we got approved and funded for a revolving line of credit. One of the top tier products here, everybody wants it. And today we're going to talk about how they got it. Okay, so the client was reached out to Capital Infusion, was looking for some funding options. They are an architecture business in Texas. Architecture firms, oftentimes will have projects that come up. They actually need to self-fund some of that project prior to getting it into process, prior to getting a first invoice funded on their end by any of their clients. So revolving line of credit's a perfect opportunity, perfect program for this type of situation where a client has a flexible capital need, unknown dollar amount that they'll need, unknown term, I should say, that they will actually need the money for. A revolving line of credit, this product works well for companies that require a flexible solution for their working capital. They may not know exactly how much they need or how long they'll need to keep it out for. The revolving line kind of fills that need as you're able to pay off early with a up to 18, maybe sometimes up to 24-month term on the line of credit. Obviously, as soon as you pay it down, you can pull on it again, and you only pay interest on money that you have out. So anytime you make a draw on that, you're only paying on that balance until it's paid in. So if you pay it off in 1 month, then you only pay 1 month's interest. If you pay it off in 18 months, obviously you take the full organic term to pay that off. You'll pay the full interest. So just keep that in mind. Revolving lines, great for flexibility, really good, especially if you're looking for those lower rates to keep the business moving with cash flow that you need. So when we look at a client for a revolving line of credit, it is really actually our top tier product. Something like 2% of all borrowers have ever qualified for the program. So again, let me say that again. Something like 2% of all borrowers have ever qualified for the program. So this is very important for borrowers to understand. It's top tier product, and that's what that percentage is who qualified. Again, not who took it, not who got funded, but who qualified. So just keep that in mind. It is a top tier credit product. That means 750 on your personal credit when we do the soft pull, right? No hard pulls, it's not going to be like a mortgage or a car loan here. We're not pulling from three bureaus. We're just doing a soft pull to verify identity, ensure no taxes, no liens, that sort of thing. So on that soft pull, it does need to be at least 750 or higher to get that line of credit product, to get an approval there. On the other qualifications, we need at least $30,000 a month or more in revenue. If you have super high credit, 800 plus, and you're doing $20,000 a month, we might be able to slide you in there. But again, just basics are 750 plus credit, at least $30,000 a month or more in revenue. And generally speaking, we need a time of business of at least 3 years with the business established, just Secretary of State website of 3 years or more. So 3 years, 750 credit, and at least $30,000 a month in revenue. I would say, we could go down to $20,000 a month in rev if you guys have 800, 820 credit, something in that excellent range there. So there's always complications in almost every deal. Surprises pop up. That's actually the key. It's not just about rate and term. A lot of borrowers, they get so caught up on, oh, what's the rate, or oh, what's the payment? Well, it's really important. Is the team actually going to be able to get this deal funded for you? Because there's many hurdles that pop up along the way. When you're trying to fund a line of credit, one of the things that will pop up often is, do you have any other debt? What sort of debt is it? If we see a monthly payment on there, we're going to ask, what's that for? Is it for equipment? Fantastic, because we can work with that. If it's for another loan or you recently took on debt, it might hurt the approval. So we are going to look into it. We are going to look pretty deeply into the credit history of the last few months specifically. Yeah, so delays, roadblocks that do come up. It is actually key is managing expectations. That's a really big part of our job because every client, they want to know kind of what's going on right now. While you've got other deals, you've got other clients, so we need to make sure we take care of each person on a personal basis. We are a boutique lending operation, so for us, it's very important the personal connections that we make with our merchants, with our clients. So in these particular cases, because you do have these hurdles that pop up, you will have some concern from the client. Am I actually going to get funded? Oh, should I go look at other options here? Which can also complicate the approval, right? We don't want you going to have your credit run at a number of different lenders, and now it looks to us like you can't get approved anywhere because you're shopping so many places. So there are, benefits to working with us because we can give you this type of advice. Hey, stick with us, wait till let's see what the approvals are. Let's see if it funds, because if it does, fantastic. If it doesn't, we'll have other options. But if you try to go off, kind of on your own and try to find these other options, you actually could harm your approval. If we get the approval, or if we get the package from, too many other brokers, for example, or if you submit it to one of our underwriters through a different channel, we can sometimes just kill the deal outright on those lines of credit because, again, top tier product. We do not want somebody who's not getting approved or who's just going around shopping terms. Again, this is private money. We spend a lot of money on our marketing. We care a lot about our clients. We want to take good care of them. So we don't want them to harm their own chances, actually, and get in their own way. So sometimes you do have to manage those expectations, ensure the client understands that this is actually going to give us a better deal in the long term if we just, listen to our underwriters, work with our team here, and trust the process, because we'll get you funded. Okay, how did a client react when you're funding them successfully? Obviously, they're very happy. They're excited. They really get excited when they get to use that revolving line for the first time. So they'll get the first funding, but then they'll go and, again, something will happen. It's a flexible funding option. Something will happen in their business. They'll need to use that line. They'll go draw on it, let's say 5, 6 in the morning. Don't have to talk to anybody, sign into their own online portal, and they have that draw that day. They've got the money that they need. They don't even have to talk to me. So they're very happy usually when we get this set up for them, because subsequent draws, consequent fundings, totally are independent, and you can do it within the portal we set you up with once you fund with us. So very convenient, and something that not everybody does. And you don't even have to talk to anyone to pull on that line anytime you need it. Yeah, so this particular client, architecture firm in Texas, has been doing well. They were able to use the first draw on a project that they needed to get moving. They have since won a new contract from that client. So it actually was a tremendous help for their business, and they've now drawn on the line, I think, 3 or 4 times since we funded them about 2 months ago. So it's really great to see because, again, like I said, they can independently draw on that line. They don't have to talk to us to get it reapproved or submit anything. It's literally their money. You use it whenever you need it. If you found this helpful, like and subscribe.